Welcome back, traders. Sasha here, Second Skies Trading. I hope you had a fantastic week, and we are back here for you with another top trade review where we once a week review trades taken by ourselves or our students in our advanced courses to show you how we trade and how we teach our students to make money trading. And this week I thought I'd share one of my own trades that I took. It's not a monster trade in terms of profit or return, but the price action was really clean and very straightforward. And I thought you might find it helpful to see how you can read this price action and how you can attack these structures yourself in your own trading. And in this video I will do a top-down multi-time frame analysis of the price action context leading up to the trade so you can see why I took this trade. I will share with you my entry strategy, why I get in, where I got in. We will have a look at the exact entry, stop loss and take profit details, and make sure to stick around until the end of this video because then we will look at potential improvements that I think I could have made to my own trade here, and I think that could be helpful for you as well in terms of learning experience around price action trading. And on the screen here in front of you, you can see the trade here where you see my entry at 163.05. You can see my stop loss here at 1.6365 and my take profit at 161.547. And in total return here is 2.5 R on this trade, which means I made 2.5 times the risk on this trade. And to put that into perspective, it means that if you would have risked $10,000 on this trade, you would have made $25,000. If you risked $1,000, you would have made $2,500. And if you risked $100, you would have made $250. And the holding time on this trade was 2.5 days, so matches really nicely with my R return on this trade, and the total return in terms of pips was 150 pips. And here you can see a screenshot of my broker platform matching with the details on the chart I just showed you. So you have the opening time here, closing time, the traded symbol, the entry price, the closing price, and the pips I made on this trade. And now that we have covered all the details of the trade, let's head over to TradingView, our favorite charting platform that we use on a daily basis. And if you're curious about TradingView, if you have not used it yet but would like to give it a try, we do have a 30-minute tutorial on how to use it, and you can access that video by clicking on the link in the top right corner or by clicking in the link in the description below this video. And as you can see here, I have marked my trade here on the charts where you can see my entry, my stop loss and my take profit. And I have 4 time frames on my screen here, which is the weekly chart, the daily chart, the 4-hour chart and the 1-hour chart. And looking at the price action context, for a short-term trade like this, we do not really need the weekly chart, but we can have a brief look here what happened on the very long-term chart here. And you can see this massive bull run here in March, which then was followed by a very strong and sharp reversal, taking price back below this long-term resistance zone that had held all the way back since 2015 here in August, and then held multiple times here again, and now we are back below it. And we had a really nice confluence point here once price got back here in the beginning of August, where price rejected from the dynamic resistance, which is the 20 EMA here, and also at this long-term area of resistance. And in terms of dynamic support and resistance, we do have a video where we explain more in detail how you can use it in your trading, and you can check out this video by clicking on the link in the top right corner. Now, going down to the daily chart, it becomes a little bit more clear why I took this trade. So we have price rejecting here at this long-term resistance here. We have a sharp bearish impulse move, but price didn't make it all the way down to this long-term support here, and instead we saw this sharp reversal again, trading back to the dynamic resistance, also the 20 EMA on this chart here. And we see multiple rejections here, and bears came in with force, and this was actually the second touch here on the 8th of September, and you can see this very strong bearish rejection here happening after that day. So this is when I went down to the lower time frame and I spotted this area of resistance kind of setting up here on this chart. And when I went down to this time frame, I could clearly see 3 strong rejections here, one of which is a lower high here. So we have this high here, we have a higher high, but then we have a lower high and another rejection. And I said here, this looks to me like we are setting up a short-term resistance zone at the daily dynamic resistance. So, and this is where I placed my entry order. So I got in here at 163.05, had my stop with the buffer above this entire resistance zone, and I took my profit down here a little bit ahead of these lows over here. And as you see, price came back here. We had another strong rejection. Then I had to sit through another another retest here of this resistance zone, and then price sold off all the way down to my target. It kind of overshot a little bit the support down over here, but it didn't make it all the way down to the long-term support. So likely this long-term support down here, which I've marked, is a little bit wider. And after that, price just reversed and traded all the way back up into the long-term resistance again. So to summarize my trade, what I'm doing here basically is to trade in line with the daily bias, which is bearish here. You can clearly see lower highs, lower lows, bearish impulsive moves followed by corrective structures. Then we have a reversal here, but then again, a corrective structure that is failing at the long-term resistance, another bearish impulsive move. So overall, the context on this chart and the bias and the trend is clearly more bearish than bullish. And then we also on the lower time frame have the same thing, where we have this corrective structure that's failing up here. Price breaks it impulsively to the downside. I have a bearish bias here, short term as well. And then once we set up this kind of resistance zone, I said, hey, I want to get short here. And I wanted to take my profit down here at the lows, a little bit ahead of the long-term support, because many times the orders are stacked in layers and come in a little bit ahead of areas of support and resistance. So this is the highest probability target for this type of trade. So all in all, not an overly complex trade in my opinion, and it's primarily based on one of our core pillars of price action that we teach, which is the impulsive and corrective price action model. And if you're not yet familiar with impulsive and corrective moves, we do have a specific lesson in our free forex trading course that you can check out by clicking on the link again in the top right corner. So looking at potential improvements, one thing that is really important when you look at improvements and optimization is that it's easy to over optimize things with all the extra information you get after the fact, and that means in hindsight. So you want to focus on the things that you know that you'll be able to see and spot in real time. And another thing that's really important is that optimizations and improvements often also come at a trade-off. And I will explain in more detail what I mean by that. So looking at my trade here in more detail, if we zoom in here, one thing that becomes really obvious here is that I could have gone for a deeper entry, at least to these rejections and these highs over here. So if I would have gone for a deeper entry, I would likely go for this one here. Instead of going for the lows and the closes here on these candles, I would likely go to the highs over here. So by doing that here, I decrease my chances of being filled because there's no guarantee that price will pull all the way back up here. And the deeper I go into the zone and the rejections, for example, if I would have gone for an entry up here towards this spike high here, the probability of my trade getting filled would have been very low. So the deeper I go with my entry, the lower the chances of me getting filled on my trade, and the bigger the risk of missing out on the trade. But the profitability on the trade gets really, really good. So that is one trade-off for this one. But here it becomes obvious that I could have gone for this one here. I went for the highest probability entry location, which is this one, because I wanted to get filled on the trade. But if I'm okay with kind of decreasing the probability of getting into the trade a little bit, I could have gone for these highs over here, which still had 3 solid rejections in this area around 160, 63.20. And in terms of target, I could have gone for the lows here with most touches over here. I went a little bit higher up where I had these touches here as well. And the same is true for my take profit. If I go for the absolute extremes of this short-term support over here, chances of my target being missed and price just taking off like it did here without increases, but my profitability on the trade goes up. So there is a trade-off when you make these adjustments. But I think in this example, I could have definitely gone for these lows over here. Still 1, 2, 3, 4, 5, 6, 7 rejections in this area. And in terms of my stop loss, I don't want to touch my stop loss. That should still be above this zone here. So it's very well protected, because you always want to have your stop in a location that if it's hit, your trade idea is invalid. So I wouldn't want to touch my stop on this one, but I think I could have gone for a deeper entry here and also gone for a little bit more on the profit side. And these minor adjustments alone would have increased my R return from 2.5 R to 3.9 R, which is a lot. That's 1.4 R extra on this trade. And over a series of 10 trades, that's 14 R. If over a series of 100 trades, that's 140 R return extra. And that is really a lot. So small improvements can have a very big difference on your performance and on your bottom line at the end of the year. This sums up this week's top trade review video. We hope you enjoyed it, and if you like it, please make sure to hit the like button and to subscribe to our channel to help us grow and to receive notifications immediately once we release new content like this. If you would like to learn more about how we teach our traders to make money trading, and if you would like to access more free training material, make sure to visit our website at secondskiesforex.com, where you can find tons of free trading articles, trading tools, free forex course, and a free ebook on price action, in which we share one of our core price action models on impulsive and corrective price action. Other than that, leave a comment below. What did you think of the trade I took here? Did you take a similar trade? Are you bullish? Are you bearish on the Euro Aussie? Let us know in the comment section below. Chris and I look forward to your comments and questions. And with that being said, good luck trading and see you next week for a new top trade review video.